let's start off with the fact that we've seen incredible gains coming through for the NSE 20. Many are wondering how much further we could go from these levels. What is your view?
Thanks, Eleni. It's surprising, really, that people find it surprising the stock index has been going up. We've had it go up consistently for 4 days. We saw it hit the first high at 4,148 points. Then following day, hit another high at 4,181 points, and still hit another high yet again on Friday, closing at 4,226 points. So we expect the trend to continue, and the very psychological level this time round should be the 4,500 point mark. We've had increased demand for the equities. If you look carefully at the volumes traded, they are constantly on the rise, especially of the top movers, Safaricom, KCB, Corp, Mumias. So the outlook is good, and we expect this trend to continue.
Of course, we're also seeing some earnings coming through from banks as well. Equity came out with some numbers last week, Friday. Profit after tax, a gain of 35%. Operating expenses, though, up 34%. We know that many investors were actually quite impressed with these numbers.
Yes, that's really true, and I would have to say, even looking at the stock price at the bourse itself is an indicator of how people received the positive results. We've seen them convert their single-digit annual growth of 5%, which was released earlier, to a double-digit growth of 43% profit before tax, from 1.7 billion to up from 1.2 billion. So equity, yes, is a counter to watch, is a bank, big bank like the others to contend with, and for investors alike, it may be a stock to buy rather than sell at this current moment in time.
Well, we've got a PE of 15.5%, which is fairly above its market peers, though. Some investors say looking slightly expensive right now, but of course you are citing that we are expecting to see quite a bit of growth coming through for equity.
Yes, the PE is always an indicator of how a stock is expected to perform in the long. But we must remember that they did a lot of regional expansion, and if you are to look at the figures, a lot of their revenue went into expansion and rather than growth in other areas like credit facilities. You see, they opened a branch in Southern Sudan. They still opened one more in Uganda, and they're yet to recover from these increased assets.
Looking at KCB, because KCB's PE is at 12.4%, and many investors are saying that it's offering quite a bit of value, but we know that they are planning to raise some money. We are worried about the dilution of earnings at this stage, but many say this will actually be good for the company going forward because they do want to expand their territory as well.
Yes, as I mentioned before on the show, KCB stock will definitely, it's inevitable, the stock price will be diluted. But what I must add is that it's a long-term venture. For any investor coming in right now, they may look to capitalize at getting the rights at a discounted price and maybe hold this on further for a year or two before looking to plow back on their returns. And we know, again, once again, I reiterate, it's the bank with the largest asset base, so there's no need to worry. If we look at the volumes traded on Friday, 2-point-something million shares traded. Demand is still high. Today, the market, it opened at Kenya shillings 23.25 cents. KCB is here to stay. I have no worries for it, and I'm optimistic. It's a stock which will grow back up to the expected price.
All right, Eveready came out with some interesting numbers as well. Profit before tax, 54% higher, of course, an improved economic environment. But interesting to note that the company is still held back in terms of giving a dividend.
Not surprisingly so. I didn't expect Eveready South Africa Limited to issue dividend this time round. We must note, however, that the profits were expected to go up because we are moving out of a bad season, a bad economic season in 2009. They had a good increase in profit, up to 28.2 million from 17.8 million in the previous year. And I saw something about them thinking to look into solar as an alternative power source. So these new moves could help the company recover from its slump. We also have them moving into the cosmetic industry. They're thinking of, I think they've already begun producing razors, shaving razors. They might think of something else to boost their revenue. We also must remember the statistics never lie. Eveready is the largest of its kind in terms of dry cell production in Africa. So I think there's no need to worry in terms of investor confidence. Eveready is on its path back to recovery.
Robert, looking at demand for cement, because that's also rising, and we've seen amazing volumes going through the likes of Bamburi cement as well. Your view on, as you said, stats never really lie, and we know that we are expected to see quite a big upturn in terms of cement demand as well. So a good time to enter this space.
Definitely. Right now, I would rather be the buyer for any of these cement producing companies. By these, I mean Athi River Mining, we have the East African Portland Cement, and we also have the Bamburi Cement, which has been really a mover over the past couple of days. We've seen it move about a 250,000 shares on Friday. And back to what you said about the demand, yes, it's up 4.8% as recorded in January 2010 compared to January 2009, and this I think is an indicator of also economic recovery, because we have a larger segment of the middle class in building homes, as the statistics say. We also have a lot of infrastructure going on. Infrastructure contracts are on the rise every day. So I would say the stocks are really a thing to look at as a buy for right now.